So every VC that comes to us, even now, we ask them as many questions as they ask us. So it's a
Mhm.
two-way conversation, not a one-way.
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
Justin, as you know, you are in corporate, and because you are in corporate, you have a lot of money pay you. You have a holiday. You have your description very clean. Okay, this is what you have to do. Somebody come to you, Justin, do that. You say, "I'm sorry, this is not my job." Still, they're paying you a lot of money for what you're doing, and you decide to throw this away to start your journey as an entrepreneur, which is you cannot tell, especially you're the CEO, that something is not your job. Basically, everything is your job. And what do you have for people listening this broadcast that want to do this transition from corporate to entrepreneur? Still, they don't find the courage. They are trapped in this golden cage. And they want to make that jump because number one, you have family, friends. Number one, everybody will tell you crazy, and then when you start, you will realize that actually they were right. There is a crazy thing to do. So tell us about this transition. Where do you find the courage, and were you aware about the huge risk that you taking, and what are the good, the bad, and the ugly of this transition?
Yeah, so that's a very good question. I think initially there's this idea, a regret minimization framework. If you think like I thought about in terms of a longer term perspective. So I was like, where do I want to be 20, 30, 40 years from now, right? If I look back on my life, will I have regretted not taking a chance on starting a business and creating something of tremendous value? So that was one part of it. The second part was the idea for this sort of obviously came about from, just being exposed to the industry, having different, certain educational backgrounds, understanding how these things actually work. Uh, we did know that this is a very, very, very large market. So even if we didn't sort of take even if we didn't, let's say, execute on the level that, I mean, we're pretty ambitious and we're trying to push forward, but even if we didn't succeed at the level that we wanted, we could still have a successful outcome. So we thought of that as sort of a risk management perspective. So we were like, okay, if we looked at the base case, the best case, the worst case, what is the worst outcome? And we thought even in the worst scenario, it was still worth doing. So that was another thing. So you have to think about, I would always encourage people who are trying to think about starting a business, think about it in terms of base, best, and worst case scenarios. What's the worst that can happen? The other thing is if you don't try, you'll never know, right? So like that's the ultimate thing. Like, I mean, if you one thing I'll say is like I was also in a position where I don't have a family, I don't have commitments yet. So I was like, it's worth doing, especially now, before you have those things, because at that point it becomes much more difficult. The bar is much higher because you have responsibilities, you have things to look after. So if you're going to do this type of thing, and you don't have sort of those responsibilities yet, I would say do it while you're younger and then sort of take advantage of that time frame. Because even if you fail completely, you still learn something from that process,
You
right?
always can come back to corporate, yeah.
You can always go back to
Maybe you
corporate, but
come
you'll
back
be
as a
better.
consultant. They will pay you even more,
Yeah,
right?
but you'll more. So you'll be more valuable, even in the
Mm-hmm.
case where you failed, because you'll know
Mm-hmm.
what doesn't work, and that's
Oh,
also
yeah.
a valuable thing to know. So,
Yeah.
so that would be my advice, at least, yeah, on that front.
No, Justin, the starting a tech business, okay, you coming from a finance background, and like I said, I spend a lot of with the tech community, and the process that you describe is just perfect. It's like you growing exactly in the right way of doing it, which is something really strange because the normal tech founder, there's someone that, okay, sometimes they have a technical background and they get in love with the product, they start to develop this product, and to put a lot of time, money, and energy to creating this software that is gonna change the world. And after they this big elephant, they haven't asked to any single person yet if they're gonna buy it and what form they're gonna buy it and how much they're willing to pay for it. And now they have this big elephant, and then they go out there to try to look for a VC for funding to try to set this elephant in the price that they want. And it's almost impossible to find funding. They're frustrated. They come to me, Harry, help me. I say, how can I help you? If you guys already lose all your time, money, energy, and effort in the wrong thing, because I get it, you're passionate about writing code and you're all engineers, but this is not how business work. And
Yeah.
that dynamic doesn't work. I learned this in the hard way, Justin, when I started my first property business, managed to sell with 5 million. And the first room that I want to rent it, yeah, I showed to one guy. I said, look, do you want this room? And he said, no, look, it's a bit dirty, needs some painting. No, I'm not taking the room. So the guy left, and I went directly to the to the sell the paint and said to the guy, listen, I need to paint a room, and I never paint in my life. Can you give me this? The guy, Harry, I already know that you never painted in your life, because the thing that you're asking, you don't have any clue. This is why paint, go and paint it, you will be fine. So I paint the room, the window, the floor myself. It was a total mess, but I managed the whole night no sleeping, because people think that painting a room is easy. It's not if you don't know, have any clue. You can take it the whole night. So the whole night I finally finished. Okay. Next day I have a second viewing. It's a girl. So a girl opened the door and said, look, do you like the room? And the girl said, yeah, I like it. It's clean, but it's a little bit cold. Live in London. So yeah, it's white, but there is nothing warmish. No, I don't want it. So the girl left, and I went directly to IKEA and said, okay, you want warm? I'll give you warm. So I bought these. They said they're pink, orange, and red. Yeah, put it on top of the bed. I buy a painting, this black and white with a little bit of red also, and I put a vase of flower. I think I pay £1 in the Chinese shop or whatever. And then the third girl come and said, look, this is the room. Do you want to take it? And the girl say, yes, I take it. And that was history 18 years ago, yeah, when I started my first business. So online, Justin, is not what you want to do. The client, it will polish your product. Out of the 500 million that I interviewed in this podcast, no one already have told me, Harry, guess what? I designed the product like that, and exactly how I envisioned it, the client bought it like this to the price that I wanted. No one yet. I'm still waiting for the story. Nobody yet had come. I don't think they will never come, right? So it's about that client will polish your product. They will tell you how much they want to pay and what form they want the product. So it's about listening to them. They will shape, they will finalize your product. You have an MVP, a minimum viable product, but it's the client. So you have to be very good to your client. You have to listen to the client a lot. And this is a path, Justin, that that you are following, spectacular, I had to say, and very impressed by how you're doing this, because it's rare to find in the startup founders. You tell me why you behaving different than the normal people in tech out there that they're failing. Where do you learn this? Because you came from corporate. You couldn't. Where do you learn this? Because
so I mean, I worked in corporate for not more than 3 years. So, I mean, I always had an entrepreneurial mind. So I think that's part of it. But what I will say is so you brought up the idea of like people, meaning they're writing the code and then they just take the VC money. VC money comes at a cost, right? And so this is another point that I think a lot of entrepreneurs need to think about. When you give the VC, meaning if they're giving you money, the other question is how much of the business are they controlling, right? So even if you take the examples of the big tech companies, there's always a control issue that comes into play at some point during their journey in any business, whether you're big or small or medium size. So yeah, the VC money, it's like how much equity are you giving up for that VC money? The one thing is you always want to make sure the minute you lose control because there are too many other investors, and meaning even if your business is well capitalized now, if you lose control, the company, it is very, very rare. I don't think I've seen an example yet where that business has taken off where the founder has less than a majority controlling stake. And even if you look in the public markets, founder-led companies get higher returns on average relative to companies that have just swapped in a CEO. So that's another piece of it. So, but the reason, anyway, back to your main point is like, why are we doing it this way? Because like we see the market size and we see what we're building and we're seeing it work now, meaning we're, in the US to start, but we'll have plans to come to Europe and all those things. But once we dial in on what's working, it's just a matter of replicating it, right? And so if we do it this way, we get to maintain our control, we get to shape the company and keep it customer centric, which is ultimately our goal. So sometimes a VC comes in, they say, okay, let's raise the prices. Okay, let's make sure the user gets less for their money. And it's just, that's not what we're about. So I think that's a very important distinction and something to think about. So every VC that comes to us, even now, we ask them as many questions as they ask us. So it's a two-way conversation, not a one-way.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.